Miller. Question 2 is the general ledger, 50 marks, 40 minutes. We will be doing the general ledger of Sports Shop. The Sports Shop is owned by Phil Rodri. The business uses a markup of 60% on cost. Highlighted. We need to complete the following accounts for the month of March 2024 in the general ledger of the Sports Shop. We need to complete the debtors control as well as the trading stock account. These are the accounts that we need to complete. Under information, we have the balances on the 1st of March 2024. This is the beginning of the month. These balances will be shown in the respective general ledger accounts. Please note that debtors control is an asset account. It increases on the debit side whenever we are owed more. And it decreases on the credit side when we are owed less. All the amounts that are recorded in this account must be at selling price. We will be owed the selling price of the goods that we sold. Because this account increases on the debit side and it is an asset account, the balance at the beginning of the month will be on the debit side. We will have 2024 March 01 balance brought down and the amount was 156,000. Trading stock is also an asset account. Remember, stock is merchandise or goods that we buy in order to resell at a higher price to generate profit. It will increase on the debit side when we have more stock. It will decrease on the credit side when we have less stock. All the amounts that are recorded in this account will be recorded at cost price. Because this account increases on the debit side, the balance at the beginning of the month will be on the debit side. We will write 2024 March 01 balance brought down. It was 534,000 Rand. That is for A. B. Credit invoices issued to debtors for the month of March 2024 amounted to 409,600. Highlight credit invoices. That is a source document. When we issue credit invoices to debtors, it means that debtors have bought from us on credit. Please know that when we sell goods on credit, it affects 4 accounts. We debit debtors control because we are owed more at selling price. We credit sales because it's income at selling price. We debit cost of sales because cost of sales increases whenever we sell at cost price. On the debit side, it's an expense account. We credit trading stock at cost price because we are having less stock. We just gave it to the customer. And this is for the month of March 2024. They gave us 409,600. This 409,600 is the selling price. Therefore, it will affect debtors control. Debtors control will increase on the debit side. Credit sales to customers are recorded in the debtors journal under the sales column. That's why we have sales, debtors journal, and the amount will be 409,600. This amount will be credited to sales account. We were not asked to prepare sales account yet, so I will not have sales account. The same amount of 409,600 will be recorded on the debit side of cost of sales at cost price and on the credit side of our trading stock account. But here, please note that it will be recorded at cost price. We sold goods on credit. Cost of sales is affected whenever we sell goods or when goods are returned. This was under the cost of sales column in the debtors journal. To find the cost price, you will take that 409,600 multiplied by 100 plus the markup of 60%. It'll give you 256,000. Or you just take that 409,600, you divide it by 1 plus the markup percentage, which is 60%. It'll still give you the cost price, which is 256,000. Please know that this will be recorded on the credit side of trading stock because we are having less stock. We just sold stock. That is for B. Let's go to C. Trading stock purchased. This trading stock was purchased for cash during the month of March. It was purchased for, well, the marked price is 613,000 before a trade discount of 13,000 was received, or discounts were received. Here, guys, we bought trading stock. We are not selling, we are buying trading stock. How did we buy trading stock? How did we purchase trading stock? We purchased it for cash. This entry will be recorded in the cash payment journal. However, which amount are we going to record in the cash payment journal? Are we going to record that 613,000 or are we going to record the 13,000? Or are we going to record the 613,000 minus the 13,000? We are not going to record the 613,000. We are not going to record the 13,000. A trade discount is not recorded. We record what it cost us to buy the stock. It cost us. That's 613,000 minus the 13,000. That's how much it cost us to buy the stock. Two accounts will be affected. You debit trading stock at cost price, you credit bank at cost price because you paid the cost price, and the cost price here will be the marked price minus the trade discount. So it will be that 613,000 you minus the 13,000. We just bought stock. We are going to debit trading stock with bank from the CPJ because we are having more stock. We are going to debit it by 600,000, which is 613,000 minus the trade discount of 13,000. And that will give us 600,000. Stock is going up by 600,000. D. Invoices issued by suppliers for merchandise for March 2024 amounted to 351,800. So here it's us buying on credit. We were not issuing the invoices to debtors, but it was issued by suppliers, meaning that we were receiving an invoice. When we receive an invoice, it means we are the ones that purchased goods on credit. Unlike when we sell, when we purchase goods on credit, only two accounts will be affected, guys. You debit merchandise, which is goods or trading stock, at cost price, which is at 351,800, and we credit creditors control because we bought the stock on credit. When we buy goods on credit, they'll be recorded in the creditors journal. Therefore, this doesn't affect our debtors control. Instead, it affects our trading stock account. We have more stock. Therefore, you will debit our trading stock account by the cost price of goods purchased. This will be recorded in the creditors control or in the creditors journal. And that's why we write creditors control account will be on the credit side because we are buying on credit. Liabilities increase on the credit side. But we are going to debit trading stock because we have more stock. We just bought stock on credit. To buy this stock, it cost us 351,800. E. Some debtors were not happy with merchandise supplied to them. Merchandise is trading stock. It was supplied to them. 2% of debtors who were sold goods on credit during the month of March returned their stock. In essence, they are simply talking about these debtors here. So 2% of this credit sales were returned by customers. That is debtors allowances. Please know that debtors allowances will affect 4 accounts. If you rewind this video and go back to when I explained B, you just record all those 4 accounts but in reverse. So you just flip them around. Instead of debiting debtors control, you credit debtors control. Instead of crediting sales, you debit sales, but the debit of sales goes to what we call debtors allowances, which is an expense account. As I've said, you will simply find the selling price of these goods by taking the credit sales of 409,000, multiply them by 2%, it'll give you the selling price of goods that were returned. And we are going to credit debtors control by the selling price of goods that were returned. I said we debit debtors allowances, we credit debtors control, which is what we're doing here. That's why we credit debtors control with debtors allowances. This will be recorded in the DAJ. DAJ stands for debtors allowances journal. It'll be 2% of our credit sales. It'll be 2% of that 409,600. Which will give us 8,192. So debtors control will decrease by 8,192. The other 2 accounts that will be affected. Remember for B, we debited cost of sales, we credited trading stock. Here we flip it around. We debit trading stock because we are having more. We credit cost of sales. So to get our cost of sales, we are going to take that selling price of 8,192, multiply it by 100 and divide it by 1 plus 60%, or simply multiply it by 100 divided by 1 plus 100 plus 60% or 60, which is your markup. We are going to debit trading stock with cost of sales from DAJ. This will be recorded in your debtors allowances journal. And as I said, to get the cost price, you will simply take 8,192 multiplied by 100 and divided by 100 plus your markup of 60%, or you can simply use this formula here where you will have the selling price as 8,192. You just divide it by 1 plus 60%, and this will give us the cost price of 5,120. And that's how we got this 5,120. Let's move on to F. Defective stock returned to suppliers in March amounted to 29,000. This will be recorded in the creditors allowances journal. Only two accounts will be affected. We are going to debit creditors control because we owe the creditor less. Please note that if we are the ones that are returning goods, we will not have creditors allowances. We only have creditors control. It will be debited because liabilities decrease on the debit side. It will be debited by the cost price of goods that we returned to the creditor. We are going to credit our trading stock. So accounts affected here, we debit creditors control and we credit our trading stock. This entry will be made in the creditors allowances journal and the amount will be 29,000 Rand. Obviously, this will be recorded on the debit side of creditors control account, but it was not asked in this question. G, the cost price of cash sales in March was 418,000. Please note this entry will be recorded in the CRJ. Because we are selling goods, it will affect four accounts. We debit bank because we're receiving money, we credit sales. You see, it's the same as B. The only difference is that instead of debiting debtors control, we debit bank. So here debtors control will not be affected because we are not selling goods for, while on credit, we are selling goods for cash. However, we are going to credit sales, which is the same as B. The other two accounts will be debiting cost of sales at cost price and crediting trading stock at cost price. We don't have cost of sales here, but we have trading stock. But guys, there's no need to calculate cost price because we are actually given the cost price. Now, the only account that is affected that we were required to prepare will be trading stock. So what you're going to do is you are going to credit trading stock with cost of sales. This would have been recorded in the CRJ. The amount will be 418,000. During the month of March, it was decided to write off 5% of the opening balance of debtors control account as irrecoverable. That is bad debts. So bad debts will be 5% of this 156,000. When we recognize bad debts, we just debit bad debts and we credit debtors control. Now, debtors control in the general journal will also be affected, and this will be recorded on the credit side of your debtors control in the general journal. And the total of the credit side, we will bring it here as general credits. Others call it sundry credits. The amount will have been 5% of 156,000, which is 7,800. Receipts from debtors for March, which is 396,000 after allowing 1% discount. This was recorded under debtors control in the CRJ. So under receipts, we will have 396,000, but we were not given the 1% discount. Note that that 396,000 is at 99%. Receipts means we only received 99% of what was owed to us, because the other 1% we gave it to our debtors as a discount. So what are we going to do here? It affects debtors control. So we debit debtors control. We actually credit debtors control. We debit bank because this is a payment. Bank goes up on the debit side. Debtors control will go down on the credit side, as we will be owed less. It goes down with the total amount that was paid plus the discount. You can put them together, but here what I did is that I separated them. I took bank CPJ, which is that 396,000, and I recorded the discount allowed. So it will also decrease by the discount allowed amount, which I got by taking that 396,000 to find 1%, which is what I want. I will multiply it by 1 and divide it by 99, which is what I've got. And this will give me 4,000 Rand, meaning that my debtors control will actually decrease by 4,000 Rand. You could have added the two. And then it says certain debtors were charged interest of 5,200 due to late payments. Know that this one will affect debtors control and interest income. We normally debit debtors control and we credit interest income. The entry will have been made in the general journal. This will have resulted in debtors control and the extra columns to be debited. We are going to write it here as general debits. The amount will have been 5,200 and we credit interest income or interest on overdue debtors. The owner feel Rotary made donations highlighted worth 15,000 Rand for the month. 4,000 was for cash, so the cash donation will have been recorded in the cash payments journal. It will not affect any of the accounts here. And 11,000 was for trading stock. That will have been recorded in the general journal. We were going to debit donations and credit trading stock. So you will bring it here and credit trading stock by the cost price of goods that were donated. We were given the cost price here. We will just credit trading stock by that 11,000 Rand. Oh, looks like we're done. And then guys, you just balance off, all right? To balance off, you look at the bigger side and you simply add and then minus the smaller side. I did not have enough space, so what I did is I added the 396 with the 4,000. It gave me 400,000, and I said that is the discount allowed plus bank, which was recorded in the CRJ. And what you can do now is simply add the bigger side. The bigger side here was the debit side. So when you add the debit side, it will give you that 573,800, right at the same total on the credit side. And then you're going to take that 573,800 minus 8,192 minus 7,800 minus 400,000. The balancing figure, we call it balance carry down. And we're going to carry it down or forward to the next month. The next month will be April Fool, which will be balance brought down at the beginning of that month, and the amount will be 157,808. That is what we will start the month of April being owed to us. Here you will do the same thing. The bigger side is the debit side. You put it as the same total, you minus the balancing figure will be balance carried down, which will be 834,920, which becomes balance brought down the following month at the beginning of the following month. Now for 2.2, it requires us to list 3 ways that debtors can be encouraged to settle their accounts earlier. We normally offer them settlement discount, and then we tell them that if you don't pay within a certain period, we are going to charge you interest. And then we must just send them regular reminders, which might be through cell phone messages, calling them. I think we can even include WhatsApp there, and I don't think any company still sends letters or email them. Those will be regular reminders just to remind them that, hey, you're still owing us, all right? For 2.3, discuss 3 measures that can be implemented to sell stock much quicker so we can reduce the selling price, or what big retailers in South Africa, your ShopRite, your Pick n Pay, your Spar, your Woolies, your warehouse, have I seen it? Uh, I forgot this business that sells fruits and veggies. What they do is that, guys, they offer promotions for bulk purchases. So promotions is where products are sold at a reduced price. So you just offer them trade discount. You offer customers trade discount, or basically advertise more. That's all you have to do. All right. We good? Thank you for watching, guys. Please keep in touch. If you need to know where to find me, please check description. You'll find the details there. I am available online and in person. Thank you for your support. Baya Danki, Cape Town, Danki Baya, Pretoria, Tswane. Thank you for your support. I really appreciate it. Khoso.